Hello, this is Yasser, and today I am here with an update on US Iran war. As you know, the ceasefire was announced. Markets bounced, oil pulled back, and just like that, people started to relax. This is exactly what worries me. Because this is how traps are set. A headline comes out, the market breathes out, retail traders think that the danger has passed. And right when everyone feels safe, everyone started to invest, everyone, just like FOMO in the market, the real move begins. That is the part most people miss. Yes, there is now a 2 week pause between the US and Iran. Yes, the Strait of Hormuz is reopening. And yes, the markets are reacting as if the worst is behind us. But a ceasefire is not a solution. It is a pause, and a pause can be far more dangerous than panic because panic makes people cautious, but the relief makes people sloppy. That is why I want you to slow down and look at this properly. The average person, the average trader sees the news and think, good, it's over. But that is not how our subscribers, how our students, how our forecaster looks at the market. We do not start with the headline, we start with the cycle. That is the difference. Most people think geopolitics caused the move, but it does not. Geopolitics may be the trigger, it is usually a trigger. The cycle was already there, the pressure was already building, the market was already set up. The news simply gave it a reason to move. That is why you have to be very careful with this rally. Because if the market pushes higher on a relief and move runs into one of our reversal dates, then what most people call recovery may actually be a setup, not strength, a setup. And if that rally fails, what are you left with? A lower high, and in a weakening market, a lower high matters. And that is often the point where people finally realize about the bounce instead of understanding the trend. This is where cycle work becomes so valuable because while everyone else is reacting to the ceasefire, everyone else is busy in buying the market. We are watching timing. We are watching the solar dates. Those are the dates we monitor each month for likely changes in direction. And when price lines up with the time, that is when the markets start telling the truth. So if this relief rally carries into mid-April and stalls, that matters. Because then the question is no longer, did the news sound positive? Then the question becomes, did the markets fail on time? That is the questions professionals, that is the questions forecasters ask. And you also need to watch gold very closely here because there is another place where people get caught learning the wrong way. Many assume gold must keep rising if fear stays in the background, but history is not that simple. So it may be the final lift before a much larger decline starts to unfold. Again, that is not the sort of thing you get from headlines. And that comes from studying cycles, timing, and market behavior over many years. So, what should you do with this? First, do not chase a really rally just because it feels good. This is how people get trapped. Second, watch what happens around the negotiation window and the reversal dates. That is where the real information will come from. And third, zoom out. This 2 week ceasefire does not change the bigger cycle. It does not erase the long range setup, and it does not cancel the timing window we have already been tracking. That is why this matters. Because while most people are waiting for the next headline, we are watching for the next turn. Join the International School of Forecasting. Inside the International School of Forecasting, you will get weekly live market analysis, a private member community, and a members only content library. You will get all this by getting the student membership in just $14.9.